It's been exactly 1 week since the Federal Reserve cut rates by 0.5%, and mortgage rates have started to go up. Why is that? In this video, I'm going to explain the misconceptions that people have about the Federal Reserve cutting rates and what's actually controlling mortgage rates. So if you're looking to buy a home, this will be a very important video for you. And if you already own a home and you're looking to refinance to save even more money monthly and reduce your interest costs, pay attention to this one. So on September 18th, exactly 1 week ago, the Federal Reserve cut rates by 0.5%, and everyone thought that was mortgage rates. But the reality is the Federal Reserve doesn't control mortgage rates, they're cutting the federal funds rate, the rate that banks borrow money at. And you see, this was unique because we already knew it was coming. The Federal Reserve, for over a year now, has been alluding to the fact they're going to cut rates in the future. Last year, fourth quarter of 2023, they kind of lied to us. They said they were going to cut rates 6 times in 2024, and everyone got really excited over that news. We saw mortgage rates improve on that news, and that's a key point to what we're going to look at today. And then again, nothing happened, right? Oh, inflation's worse than we thought. Oh, the economy's not quite what we thought. We're going to keep rates higher for longer, higher for longer, higher for longer. We kept hearing that. Well, then at the end of July and beginning of August, they really started to allude to the fact that it was time in September. On August 2nd, Jerome Powell said, we're cutting rates in September. I think he said specifically, it's time. Now that wasn't, hey, we might or we may, it was pretty much guaranteed. And since he all but guaranteed it, we saw the market react to the news before the actual event. Let me show you. So what we're looking at here is a chart of mortgage bonds or mortgage-backed securities. And this is what actually controls interest rates. This isn't publicly available information, so I'm giving you a behind-the-scenes look because it's really important to me that you understand how all of this works. Now, on August 2nd, Jerome Powell said, hey, it's time to cut rates in September. And you can see that the market had already gone up as a result of that. Now up here, think of it as better. Mortgage rates aren't going up when mortgage bonds go up. They're actually improving. So think of up is better, down is bad. So at the end of July, beginning of August, we saw things improve based on the announcements from the Fed. And then you can see that rate stayed pretty darn flat for the whole month of August. And then getting ready for the Fed meeting, we saw an absolute incremental, like this change right here is really not a whole lot. And then going into the Fed meeting, it was dead flat. Well, we had the Fed meeting September 18th. They cut rates by 0.5%, and mortgage bonds got slightly worse. That's because they'd already accounted for it. They knew it was coming, and since the Federal Reserve did what they said they were going to do, we didn't see much of a change. Now, if the Federal Reserve had said, hey, you know what, we're wrong, we're actually not going to cut rates, you would have seen mortgage rates go up dramatically that day because they would have recovered right back to where they were at the end of July. And now what you can see is they're starting to fall off. It's still flat, still stable, but we are moving for the worse, and this is today, September 25th. Now, I want to show you something that's really interesting. If we add the 25-day moving average here, you can see that this has been acting as like a floor for us on mortgage bonds. A floor on mortgage bonds is like a ceiling for mortgage rates. We can't go higher in rates because that's holding us in place, basically. So as of this morning, September 25th, you can see that we are dancing right on that line. Now, if we break through that, rates could go for the worse. I don't think we'd go all the way to the 50-day moving average for the worse, but you can kind of see there was a floor right here. So I think we'd end up right back where we started at the beginning of August. And I had a feeling this was going to happen because history tends to repeat itself. So let me show you what happened in 2022 that kind of mirrors what we're seeing today. So if we go back 2 years and we look at the chart, let me get rid of these lines, you can see that at the end of 2022 and the beginning of 2023, we were hitting the exact same point we are hitting today. Remember, that ceiling is a floor for interest rates. We got to break through that ceiling for mortgage rates to go lower. And we were stuck there, and then from there, things got absolutely worse. Now you can see that the highest rates we saw really in the last 20 years was October of last year. So if you bought your home October, November of last year, I'd say anywhere between August and December. If you bought a home between August and December of 2023, it is very likely you could benefit from refinancing right now. So where do mortgage rates go from here? It's a little bit tough to call because it's an election year, and election years are always a crapshoot. There's always political motivation every single year, but I think in an election year there's more political motivation than normal because both parties want to win, and they want to make us happy to win. So my prediction is we will see rates continue to come down going into the election, not dramatically, but ever so slightly, or at least remaining stable. Because think about emotionally how you would feel if rates started to go back up, right? It feels like a bad thing. Now, what happens after the election? I have no idea. Here's what I can tell you. I've been doing this for over 22 years, and in 2012, we saw the lowest rates in history at 3.875. I remember quoting somebody 3.875 on a 30-year fixed in 2012, and I said, this is the lowest rate I've ever seen in history. We'll never see it again. We got to lock. What an opportunity you have. And then it happened again in 2016. And in 2016, I said, I've only seen this one other time in history. What a great opportunity. And then it happened again at the end of 2019. And unfortunately, 2020 is skewed because of everything that happened. So I don't have a perfect data set. But what I noticed is 2012, 2016, and the very end of 2019, I saw 30-year fixed in the high threes. And what I realized is, okay, if this continues to be the lowest they're going, this probably is the low. The other thing I realized is those are all election years. And again, 2020 was an election year. I just don't have a good data set for that year. So based on previous years, taking 2020 out of consideration, I think it's clear that mortgage rates come down in election years because they want to make us feel good. If you have any questions about mortgage rates, if you want to know if you can benefit from refinancing, or if you're just looking to buy a home and want to see if it's the right time for you now, or you want to see if you should wait till later, we build personalized websites for every single client to ensure that they have a great planning tool for either a refinance or a purchase. We want to make sure you make the most confident, educated decisions based on data and analysis, not the sales and gimmicks of the mortgage industry. So if you'd like more information on that, feel free to contact me directly by clicking the link below. We can set up a Zoom. I'll walk you through it. It's completely free. So what do you think is going to happen with mortgage rates and home prices? Are they going to go down or up in 2025? Comment below, and I'll see you on the next video.